Hello and welcome to the Bullishbrs channel. I'm Jeremy and this is the watch list. Ordinarily we'd have Matthew Tuttle with us, but he's out sick today. He's not feeling so good. I blame allergies. We got the great pollinating happening over here, and yeah, any black car is now a yellow car. That's just how it goes. Anyway, I want to kind of give you a little bit of forewarning today. If you're watching and you're not familiar with a very particular pattern I like to call out, I would suggest cupping your hand and placing it about 2 inches under your chin, because what I'm going to show you is going to blow your mind. Um, the other day, when I was realizing that it was consolidation that we were seeing in the after hours and pre-market, and preemptively this kind of thing will tend to have a broadening pattern followed by a contracting pattern. Where I'm going with this, it's a diamond pattern that took place overnight, and effectively these tend to always precede volatility. And the mind-blowing part is it was able to almost precisely outline the range of the expected move from the tariff volatility. That's pretty amazing to say. But let me show you this in steps. So first it was a matter of figuring out the pattern, and then you just simply draw it. It ends up looking pretty crazy. You get a lot of lines on here. Essentially you have a bear channel and a regression line in the middle, and I split the difference between the angulars so that we get basically 4 zones within that channel that we can trade. Same with the bull channel. You find the regression, you find angular support, resistance. You're drawing a parallelogram. And effectively, for the day, it gave us our day trading targets very, very effectively, in fact. And we were able to spot the high, pick off the reversal, it happened to be the top of a liquidity zone, and we traded right to the regression line. Session was over. We were all paid for the day. So now we go into the rest of the day. We're able to pick out about where we would likely finish off. Here's the middle move here. We expected to kind of at least get to the point where we started again. Whether it was going to be at the close or not, pretty irrelevant, but we knew it was likely to get there. Found that measure, and bam, went right back to the upper channel above regression. We had a whole bar in the close right to that quarter line. Beautiful, right? So then we get into this section of it, and after hours it'll trade within these lines, but look how accurate we find angled support and resistance within that channel. We get the previous fib break here, we get a key pivot break here, we get bear targets and bull targets alike. Next day we have the preliminary move all the way back in that channel, and then check this out. Reject. By the end of the previous day, we were saying we're likely to see about a 30-point range here. And damn if I wasn't almost dead on with that. I mean, that's pretty close to a 30-point sweep. But knowing these zones, and all I had to do was look left and line up this diamond. The last time I did something where it was range that was this big and it shelled it out and outlined it was the mic drop moment from one of the Jackson holes. I think it was 2023 or 2022. We had exactly the same pattern. It took place across the period of a day, an open market day. And it did the exact same thing, only that was a 50-point range on SPY. So kind of a same. This pattern is pretty accurate at preceding volatility and defining the range within volatility, as well as the trend channels within. It is neat. Learn this pattern. Visit the Bullishbrs page, and you'll see I've got a couple of older videos explaining how to spot and how to trade this pattern. And it is unanimous with volatility. And boy, did we get it right. That was one hell of a good short. All right, so now you can put your hand down now. By now your jaw's relaxed and you're able to close it again, I hope. That's pretty neat though, I gotta say. I'm gonna mess my elbow up, pat myself on the back. Okay, moving on. Going forward in this mess, my initial target in this was gonna be about 452. We're just about there. Now, where do we go from here? Well, eventually this diamond pattern will probably be irrelevant. Eventually we'll see just the angular resistance in the upper end and the angular support become our expected range. let's move it out further, and I'm going to turn my drawings off because by the time you get to this time frame after drawing this on a 5-minute chart, it's useless and annoying quite. So let's look at the grapes here. We've got a big primary move. We got this accumulation. We had the relief rally in it. We were able to scalp this. If you've been watching the show, Matthew and I have been saying time and time again, be careful in this market. Be careful, be careful. And I also like to coin the word for traders, shorter term, being day traders, intraday traders, be nimble is a better word to say. And when we have a consolidation range, I like to split the difference. We have a primary move. Half a measure move takes us to this low here, right back to this base. That is also about the upper half of this entire trend here. So we could see a move come down and visit the 445 area, 446 area pretty readily, and we're on our way there now. That's a half from this being the primary. So this is about where I would expect the bear market trigger to be if all the Chicken Little crowd saying recession, recession are accurate in this. And worst case scenario, the European bloc as well as China and a few other countries start to say, hell no, we're gonna reciprocate these tariffs and make it worse for you too. Eventually it'll come to a head, and I'm sure people will start pulling them off. That's the intent. We're taking a bit of a gamble, but we're pretty calculated in this as a nation, to put this together. The idea isn't to just sit there and tax everybody into oblivion. The idea is to make fair trade real again, make it something where it's not a globalist money grab. It's let's have fair trade and fair values and do what we can to give all of our various countrymen a fair chance and a fair swing in the world market, not just their nation. Hopefully that's what ends up happening. I don't want to get into politics with it, but everybody's got the same idea. They want to live peacefully and prosperously. I don't think there's a single human on this planet who can't agree with that. But anyway, economics aside, we're looking at pretty good bearish potential. If we hold that line there, we have a chance of bouncing back up. Sure, we can give a half back rally into this mess here and maybe give us a reversion trade to like 470 or so. Very possible. But again, just be nimble in this market. Scalp it alike all you want. Bear markets are great for paying day traders. We kill it in this environment. But I'm also going to say swing traders shouldn't just bow out of this. This is what inverse ETFs were made for if you're a swing trader. Also, if you're looking at taking the bearish trend, you can go into option stuff. You can still be an options trader and a swing trader. That's kind of the principle. So you can look at put debit spreads to ride this down and be frugal with your risk at the same time. Strategies will apply. I've said this before, and this kind of resounds from our entire community from the get-go. It's not about what you trade, it's about how you trade it. And this market is going to absolutely drive that home for everybody, whether you're a beginner or you're a seasoned trader. You're going to remember that phrase because it is absolutely about how you trade it. So you have plenty of options, and if you get into options trading, you have plenty of ways to mitigate your risk while taking advantage of the momentum in the market. So it's a win-win in that case. Inverse ETFs, they can be very favorable for your average trader who would rather not mess with options, and it can also be there for people who will mess with options. So take your pick. Let's take a look at one other metric here, and this is where I'm going to go with this, and then we'll get into some equities because we got some trade ideas. So let's look at TLT. Let me get my drawings back on here. So TLT, not AT&T, that's old news. Come on now. I think my L button's starting to fail on my keyboard. That's what's going on. Okay. Descending channel here. We've gone through this 100 times. Sig and I over at the Bullish Bears community, we've been talking about this move for a long time now. And although it did give halfbacks, it did give some volatility here, it's still generally likely to finish this measured move back to the upper edge of reversion here for this whole trend. A to B was here and here, so this is the halfback. And we're above half a measured move from the primary down here. We're in motion, and we're in the right market conditions for this to continue. Don't forget about the previous high, though. Take a note from this high here, and I would say the fib kind of falls right in line with that quarter mark, so about 93.40 for TLT to ride to. to continue this move. And if economic saber rattling starts to happen again, or national political saber rattling, we could call it, starts to happen again, well, we kind of have an easy target here. Trade it. We're looking for continuation in this move here. Let this accumulate. It's got to break this little LZ here and give us that finishing move here. This is where I always say, write down that rule, half and whole. A little parenthesis mark at the bottom of that post-it note should be and sometimes quarters. This is one of those times where you say and sometimes quarters. So about 93.40 is the bull target from here to here. If you got long at 92.26 and you waited and you got a late entry on this, or you started entering it on Liberation Day, yeah, there's your sign. That was your entry. If you were longer term, you got in on the break of support, break of resistance here, and you went long into this mess, took your profit here, and reset your position in the half back and carried it forward to back to the return of the half measured move. Easy peasy. You took profit on that. Probably caused a red bar here if a bunch of you were following this, and now you're looking for, we could get long again and ride it to the next level. So TLT is looking pretty fruitful here. There is still some hope for green at the end of the tunnel. All right, let's move into a few equities here, and these I mostly picked off of the heat strategy mailer, and some of them I added on my own. I love to throw a curveball in there every once in a while. One that I'm watching, I'm a bit skeptical about at first, but later on it'll make sense. If you start to see the retail margin affected, I've talked a little bit about the fact that most retail sellers or retailers, they have a specific target for their margin on profit. So when the prices of the goods that they're margining goes up, that percentage doesn't change, but the dollar amount within that percentage target increases considerably, brings more revenue to retailers. So focus on that. There's potential winners in that respect, and as prices go up on goods, so should the margin. It might hurt in the first part of it. I know Walmart's taking a big hit because now they've got to take all of their previous inventory that they were making X on, and then the cash flow from that, they got to go and replenish that inventory at a higher price. So they're going to take a hit in the first part of this, but once retail starts to move, that margin percentage is still going to be the same. They have to raise prices to the consumer. That's just how it works. So effectively, it's going to hurt in the beginning and eventually take a approach to being profitable again. So one I like to look at in the meantime is I keep an eye on Shopify. And we are right in a respectable liquidity zone today. We just mapped it right to the base here and bounced. I'm looking for a return for short-term reversion if things stay favorable for this guy. Watch for a reversal in this area. We may get a good bullish swing trade to about 94 bucks. And let's look at the 2-hour here. We pretty much dipped that zone. The buyers were there. If you look left, guys, those zones are so obvious. Find the big relevant wicks, and this is an old one. You can see it was rejected here and eventually broken, tested again. Very old zone. I never wiped it off, and it has been just fruitful all the live long day. Every time I see it hit, and it actually stems back to this candle. I dragged it at some point. It happens. My charting is clumsy, and I never lock anything, so that's my fault. But it's still relevant. That's what matters. Look for a potential reversal in this mess, and we could see a reversion trade to about 94. There is some downside risk in this as well. Sure, we could start eating back to the base of this MM here that we plotted out back in the day for this bull move. And that is possible. We could see some fade in there, but then this would be a resistance area. Treat it like a pivot, but it's got range. It's its own pivot range. Let's call it that. So effectively, we could see some reversion trades set up in this area. If not, well, we can always bail and wait for this to hit the low and then test it again. That's respectable. You want to be nimble in this market condition, and just watching for a reversal here is your primary function. And if you see one that's relevant, you could see a good swing trade come out of this. I'm looking at a couple of things here in a 15-minute chart. Watch for doji to complete here, maybe a test of this low one more time. Look for like a double bottom or something like that. Something to give you a respectable entry and give you some momentum to go bullish. So keep an eye on Shopify. It's going to be high on the list. For shorts, well, Target, man, made a very beautiful measured move overnight here, obviously. Yeah, that was a pretty obvious short. They're gonna, like I said, retail's gonna take a hit in the beginning. I'll look at Walmart in a minute too. I didn't even map Target out because I pretty much lost interest in trading it. But a while back, you might remember that I had this bearish measured move mapped out, and it's finally coming true. It took forever. This is a monthly chart. This is where I had the map, and if you block, I deleted it for some stupid reason, but if you block this out, you know what? It might be on my other Webull account. That's probably what it is. We are below the half MM. Target's down here, pretty obvious. Bearish target about 76 bucks. I like it. It's a good looking short. They're going to be, like I said, in the front end of this, a loser until they replenish their inventory and reclaim their margin. Just how it works. So keep eyes on this thing. We should see something give us a sign of a reversal down here. But for now, the bears are in control. And short term, this measured move here could do a 2-for-1 and wind up a little lower. Maybe 85.50 would be a good support area for a short-term trade, and a long-term target's still the same. It's pretty obvious. All right, let me reset this so it doesn't go crazy when I hit the next one. NVIDIA. Good Lord, tech is getting beat, and NVIDIA is one of them. Can you retool and produce in the U.S. and start to say maybe we get a chance at reclaiming some things? Yeah, okay, we could say that. Just be aware that NVIDIA can be nimble in this market, but infrastructure always takes time to produce. So I don't know that there's any temporary packaging facility they can put in place anytime soon. Manufacturing still has some capacity here in the U.S., but that stuff is even shipped off to China for packaging. Like components made here, assembled in China into most likely video processors, stuff like that, sent back here as a package. You get the idea. Can we construct those here? Sure, but it's going to take some infrastructure to do. So in the meantime, yeah, we're looking for a pretty smooth wipe to fill this gap back here. And 95.70 is a pretty good target, maybe 95.50 in this range if we break this level, and we're just on it right now. So I'm going to put a mark or two on that gap. And note that the doji for the day so far is at the top of that. So if things remain bearish for NVIDIA, well, we know where it's going. Right between the gap here. It could fall into the gap. Aha, no pun intended. Primary move set, accumulation's broken, and there's your first target of support right here. And if it gets a moving, you know, that gap is pretty much an MMOA. Okay. One that Matthew mentioned also, he did mention NVIDIA as being a short-term loser in the mailer. Let's look at LEN. This is Lennar. Yeah, I can pretty much see the writing on the wall for that. But let's go over the weekly chart. Where's the support level? Well, bearish MM, primary made, secondary hits right back to this base, about 101 and some change. So bears are sweeping this stuff and making money real fast. But watch out when you see buyers, and they are likely to be here. Think back. There's your wick, right on that zone. Watch for buyers anywhere in this range. I'm going to leave that one purple because it's a weekly liquidity zone, but it makes sense. You can see it was previous support. You get the idea. If we see another one of these and we see a nice little morning star set up on this in the base, yeah, we could get a nice little reversion rally. So it might not take long for a reversion, but for now, the bears have it. Let them run it. One that I think will be pretty bullish here, and it's obviously bullish, Kroger. Man, what a U.S. producer of pretty much everything. They don't do much with China or really anybody. Kroger is awesome. Look at the amount of cheese Kroger manufactures themselves and distributes. That alone tells you it's a pretty big business, and I think Kroger's really taken excitement to this expected move here, that primary, and we've just hit the secondary target here at about 71. Just eyeballing it. Can we go higher? Well, this isn't a Creed song, but you get the idea. We're parabolic now. I'd love to see it pull back and give some reason to about 69.50 or so, and then maybe continue this trend. but what I want and what I get aren't going to be the same thing for sure here. I think we could absolutely blow away 71 and continue to 75 pretty easy. Um, Taking this into effect here, let me go ahead and draw it for you. So we look at this accumulation, split the difference, pop it up here. That's the line to beat right there at the 71. And if we get another half M, and these I'll change to gray so they don't blind you. Now my mouse button's wearing out too. I gotta get a new mouse and a new keyboard. I've cleaned them. Trust me, I service these things. All right. Da, 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 da. Okay, so 76, 77 is about a half mm, and let's say 74 and some change is a quarter. So watch for this resistance level to break here between the two M's here, and we can pretty much see a trend form out of that, I think, very soon. And of course, watch the close today. If we reject this, we may pull back, give half this bar back, and start accumulating, and then continue to move up. Hi, Marzidi. I see you on YouTube now. Finally noticed you. You probably had that comment up there for like 10 minutes. Okay, let's move on to a couple others here. Hershey is part of my mayonnaise index. Should I go through the mayonnaise index? I think I should. Let me go pop it up here. So I'm going to start with Hershey anyway, and we'll go from there. So short term, pulled back, hit support. It's at the halfback level of the previous move. We've got that. Now we found some buyers in this range. Well, lo and behold, we didn't get a bearish measured move. And last week I was saying the mayonnaise index that I made from Hershey, CLM, and Unilever kind of started turning bullish last week. Well, Hershey's going to be the slower moving part of that. It doesn't have as many eggs in its production as mayonnaise does, obviously. So I call it the mayonnaise index because this is the test group, you would say, or the example in the group, whatever. Long story short, I was expecting more accumulation here than anything, and slowly but surely we can see this looks like a bear flag that could be failing here. Buyers found it right at support and snatched it from the fire, right in the half-back level. You get the idea. We may come up and break the resistance level here, but let's play high-low mean with this. So I'll draw it in 3 pivots. We'll just do it that way. So if you take this into effect here, we'll track this low, we'll track this high. Why didn't that line up? There we go. And the middle is right about there, pretty much where this wick is. Break this, we could fail the flag and test resistance. Break this here, and we start retracing this mess right here. Whoop, I meant to do this. So we're looking fairly bullish in the short term. This is likely to give us a little bit of momentum beyond this point, and it's given us some decent trade setups. 167.50 is a current resistance. Target, if it breaks that, is 172.40. Pretty obvious. If it rejects here, it can make a second low in this range and form a double bottom here. It's playing high-low mean in this broadening pattern here. We could see a sweep back to 162.60 or 50-ish and then return in here. We could range that for a while. So keep an eye on this one. This one's going to be the slower mover, but it's also got some pretty good bullish expectations. Very, very US-made product there. Let's go to Unilever. This is a European product or European-owned company. A lot of it is made here and there and everywhere, but for now, well, remember that margin percentage. It's bullish. So let's go and have a little more respect for gaps here. And you can see this is a very choppy chart, hard to trade. I'm using it as an index more than a trade, but let's put some HA candles in play here and start looking at measured moves. This is a pretty simple one, obviously. You've got this primary here. Let's sweep it to half of the accumulation. I eyeball these things. I never have to be dead on. I just have to be close enough to make a trade out of it, right? We're in motion, and lo and behold, this is our high. Our 86.6 fib level will be about in this margin here, and it lines right up with a bullish Let's see if we melt back through the 62, 63 level, and we could target this at about 64 $4 or so. That's a pretty reasonable bet there. And go back to regular candles. You can see that candles will give you range bars, and it's effectively, if you see the close of this bear bar up here at the top where we had that little evening star reversal here, lines right up with our MM target. And I just eyeballed it, and I kill myself sometimes. Look for a move to finish out. We could see this probably accumulate in this range between the upper quarter and the top of this for a while. Pretty good trade so far. Let's look at my other favorite, and this one is kind of treading water at this moment because we can use it as the egg index. Prices came down a little bit, but they stopped for a moment during our current issue with Liberation Day. But we're still playing high-low mean. We still have all three zones intact. And as I was saying last week, we just started to turn bullish, and here we are moving. Do we have some range for a potential breakout trade in here? Well, we're accumulating in a range already. We've attempted the high here, and we came back and tested it. So if you wanted to play high-low mean here, the line to beat is going to be that fib. Or if you're using a 2-hour chart and you realize, hey, there's a wick here, there were already some sellers, we could see some resistance here in the short term, right in that area about where the liquidity zone would be on the 2-hour candles. Those I mark in orange. Those are the real winners. I love trading range to range. So if we accumulate here for a while, that's fine. It's still generally bullish. It's just accumulation, and eventually it'll break out. If we start to break above this range, well, the next zone's right here, baby. It's pretty obvious, and that's basically high-low mean of the entire trend here. So far, so good. And probably by about mid-April, as I said before, when we first had about mid-December, the bird flu was causing a culling of the flock. Takes about a good amount of time to get those birds into production again, even with hormones. Now we're going to start to see some supply come into the market, and supply with lower prices means demand will meet it. Absolutely, everybody loves eggs. Lots of products use eggs. You get the idea. We're likely to find a nice swing out of this to about 98 and some change, maybe even hit the $100 bill here at the top of the zone, short term, and then long term, we could see things return to the fib high up here. This is the 73.6 or 76.3. I never get that number right, but it's obvious there's a liquidity zone here. Look for some profit taking in that range and so forth. This could be a trade idea for a slow moving swing trade. I'm using it as an index. I've taken a couple trades in the volatility here, but I'm flat on this for now. I might take a swing again if it breaks this level and starts to trend up to this level. Pretty obvious reversion trade setup. So bear with me on my mayonnaise index idea, but it seems to be holding water so far. And it's just 3 equities. I love it. Let's go back into the rest of the day here. Should we look at auto parts? I have a friend who has a pretty large 401k investment in Advanced Auto Parts. Hopefully she's getting some relief now because my God, if she still has her original 401k position, dude, I was talking to her about it when it was here. That was a very substantial amount of money, and it's not, I mean, it's still substantial, but it's like quite the haircut. Can we see some reversion here? Well, certainly. Same thing as retail. Auto parts tend to move a little faster, especially in an economy where your vehicle prices are going to shoot up with the tariff stuff. Of course, people are going to be more inclined to maintain their old clunkers, so to speak, or their older cars, and that's fine. I don't drive any new cars. All of my cars are used and old, but I come from a mechanical background, so I actually save a fortune doing that because I don't have to pay thousands to fix things. I do it myself. So in that respect, I do have an advantage personally in this, and I'd still care to own a new car. I love my old cars. They're reliable, fun to drive, dependable, and if they're destroyed, they're just cars. They don't bother me as long as the people inside are safe. Modern cars put pressure on the market. A lot of people will of course, be affected by the cost of maintaining an older car in a very dramatic way. And weighing the difference says you can either buy a new car every once in a while and have something where you don't have to worry about those expensive repairs as much. And in the long term, it makes sense for people to trade those in and get something new every once in a while. And then there's a whole industry based on used cars that has picked up the slack in that. So in the meantime, I think the winners eventually in the long run will be the automotive parts houses, because a lot of that maintenance still has to happen. Even though the cost of parts is going to go up, you can see, I mean, they're going to have to reinvest in their inventory changes. Sure, they're going to eat a short-term higher cost to procure goods to sell. But the margin is the same. And if you ever have been inside of the parts business, there's two different price brackets. One is for shops and the other is for retail. And I don't want to give inside information on that and be accused of inside trading on it, because I don't even trade this. But I know that the margin is quite large between shops and retail customers through the door. However, the markup is usually taken by the shop, so they'll go and put those parts on the invoice pretty close to what retail would be on it, even though they procured it at a lower cost. Everybody's got to make a little profit in this, and I understand that. That's just business. But when you think about the way the margin has to move in the front line, auto parts stores don't get nearly as much foot traffic through the doors as they do shipping to different shops in the area working on cars. Again, not everybody's me buying their own parts. You get the idea. In the short term, I expect accumulation, but in the midterm and the long term, I think we're going to see a potential for a pretty nice reversion trade in this, and that's why I got the key pivots marked out here. These are old lines here. I don't need to really mess with those that much, although I will pay attention to that liquidity zone I just deleted. It's right there on a key wick. How about that? That's a daily. I'll leave it purple. What I'm expecting to see here is a test of support, which we just accumulated to this morning at about 36.75 for this particular equity. And we should see this continue to hold that level if it's going to follow through, if things work out. Whether the other countries reciprocate our tariffs and we get into a political pissing match or not, doesn't matter. The whole point is key areas are pretty obvious in the chart, and we're just here to trade, people. We're not here to talk politics, but I think we could see some support here. Let's see if they pick up the slack here and rotate inventory fast enough to meet that margin. Again, the price of the parts increase, the margin stays the same, and profit will produce a lot more revenue to flow into the company. So watch for a bullish move here. It's got a break resistance of about 40 bucks here, 39, 40 bucks, and then get into a trend here. It can fail. This is a very news risk market. Who the heck knows what's going to happen next with the tariffs? There may be some other players in here that we're not quite seeing yet. In the short term, pay attention to this zone. If it holds and starts to trend, cool, we can be bulls. But there is some downside risk to this. Look at the monthly chart. These lows back here are still relevant. Can we hit $25 a share? It's possible if something really goes wrong in this industry. But for now, that's one nice looking double bottom at an expected target. If things turn here, we're in good shape. So this is potentially one hell of a reversion trade. And, from about, 37 here, if we hold this range, extending to the first reversion target of 50.70, I kind of like that number, guys. Pretty nice. And then up here to about 60 bucks. Yeah, I'll take almost 100% return over time. Why not? Keep an eye on it. I think you're going to be very interested to take a contrarian approach and take some opportunity in this should this hold this level and start to trend. So this will be a very long-term thing. But if you're a long-term type of trader or beginner or a buy and hold investor, this is going to be interesting to you. Okay, moving on. Apple. That was the only flash of green for a while, but now look what we got. I love these descending trends. They often, gosh, you could call it the swan formation, like you have the neck breaking over here and the beak pointed down, the big beautiful bird behind it, whatever. We can call it geometric shape, whatever the hell we want. But the idea is this is a channel, and we know where the reversion line is, and it is a floating target for reversion trades, or not reversion line, regression line for reversion trades, whatever. I'm going to mark it out, and typically when they hit a base, they tend to reverse. Well, we've had our share of bullish momentum. We did break out of the 1.5 or half measured move here, rejected here, came back. I think we should hold this level down here at 194.60, but trend-wise, it should slowly get there. If it drops there with a wick, expect a very quick set of buyers to be found there. Let me go to a daily chart and mark out where that liquidity is likely to be. You could see it on a weekly chart too, but it's the same wick, this guy here. And it's right into a let's go for half a measured move back type of situation. So Apple could still get interesting in this. Economically, I don't know where I would like to examine that and call it out for, whatever the economical ramifications are, but for a technical analysis point of view, that's a pretty good support area to watch. Bearish in the meantime, and that's about a half mm down if you take this as your primary. Okay, well, it's gapped down this morning, obviously. So where are we going to see the next part of this situation evolve? Well, right down here in the liquidity zone where we're likely to find some buyers. So let the shorts have it for now. Be aware of the angular support here. It's base of the channel right here where we're seeing a flash of green. There's some covering happen. I don't think there's any new money popping in to chase this very much. Sure, it can go in and give a dead cat bounce back to give half of this back and maybe see a swing to 207, possibly. If it gets there too fast, though, watch out because liquidity will sweep that and the bears will sell that and run it right back down to support and or break support and finish a measured move to that bearish target. But boy, what an overnight hit. Holy smokes. How many products are coming across the water and being affected by this tariff news? Well, folks, it's a lot. Apple, I think, is going to eventually recover and eventually give us a nice, interesting trade. But for now, keep an eye on this level right down here. If we see this continue to be bearish or if we see some liquidity get grabbed, watch for the next few weeks to slowly grind it down to here, hopefully, and then reverse. If it goes really quickly, well, we get a very fast reversion trade. So watch Apple for volatility more than anything. And everybody's, realizing that this is a bit of a gamble for our nation to put these tariffs in place in the first place. But the idea is if other countries cave and say, hey, you know what, you're right. We shouldn't be beating each other up like this. Let's make a deal and provide smooth relations as far as global trade goes. The whole complaint is that people are tariffing our exports at a rate that is much higher than the tariffs that we're putting on their exports. So the whole argument is it's not fair. And when you say, not fair on the playground and the authority comes in and says, hey, wait a minute here, we've got to work this out. You guys can't be fighting here. You get the idea. When everybody starts getting along, then the swing set starts to really be a happy place again. Here we are. Watch out. We're going to see some nice volatility in the short run, but I think we're going to have opportunity in the short run as well. And I think if there's a chance in hell that China caves on this and we start to see those goods flow back in with a even reduced tariff tax on it, I like the idea of being bullish on Apple. And it's a company you definitely want to own eventually. Reversion target, a nice $20 sweep. That puts some serious profit in the options market. So I'm going to start looking at some debit spreads in that area as soon as I spot the reversal here. Can it go lower? Yes. But if it makes a nice reversion trade, that's a pretty badass target. I like it. Another monster in the mix here. In the short term, going to take a hit again, and long term probably see some bullish momentum. Let's have a look at Amazon. Wasn't as noted as the Apple move here. I mean, overnight it's a bit of a drop, sure, but we're right back to the middle again, about 178, 179. Let's look at the weekly charts. You can see this. This is a very long, trusted trend that eventually broke down here, so I dropped the angular on that. But the measured moves were just beautiful in this thing, right? We could see this turn into, on a weekly chart, a giant head and shoulders, and then slowly, melt into recession. And maybe by next year we could see some bounce and reversion on this. But this is Amazon we're talking about, guys. Um, if anybody can be nimble still in the retail market, it certainly is Amazon. Um, sure, the consumer is stressed right now, but we're essentially putting a lot of pressure on the Fed to drop rates, give some debt relief. Maybe the consumer bounces back, and then again, retail starts moving, so do jobs. Consumer gets a bit of a recharge in this. So kind of keep an eye on those metrics and realize that, like it or not, people still order quite a bit of stuff from Amazon. I use it to provide even some of the staples in my house that ordinarily I'd go and get at Costco. I can find them comparable on Amazon, and I don't have to go get them. I'm not the only guy who thinks like that. So let's say that maybe we find some support here and things relief a little bit in the tariff market. Well, again, nice reversion trades. We could get a nice $10, $20 move out of this off the floor here if things happen sooner. If not, sure, it can be bearish for a while. It can be a recession trend. Okay. But let's wait and see. This is a key level. In fact, I'm going to mark that in white because it is a little bit more important to pay attention to. If we hold this level and we start to bounce back up, well, we got lots of reversion trades right back to half of this guy here. You can see that a left shoulder would be relevant here. Head, right shoulder can be there. This was too soon in the trend to be a shoulder, so to speak. You usually got to find a low first and then come back to the high. If you're using simple geometric shapes, fine. But if you're a scalper and you combine the skills of a swing trader and a scalper, you realize it doesn't have to hit this. Just half of it is fine. Half is always the key metric here, half and whole. That's about half of the entire expected trend too. It's between moves. Why not? Let's look for a reversal here, and we'll probably keep an eye on this and see if we can get into a nice reversion trade setup on this. Don't be panicking just yet. It's still got some room. Did I mention Dollar General? I mentioned it in my live stream this morning. I'm going to come back to it now. Dollar General, again, I don't remember if I mentioned it in the show here. I got halfway up the list from the bottom. I think I stopped at Hershey. Okay. So we're looking at liquidity zone here, pretty obvious on the daily chart. We're looking for a break above half that zone, above about 93.50. And if we start to break out of this above like 95.50, we could see a nice reversion about half back of this gap here, which was an earnings gap. Dollar General is going to be a prominent winner if things remain, in recession territory or bear market territory. Dollar General's got the bargain, man, and I see a short-term reversion target if we break this zone. If you think of this like market structure, it's kind of where you'd expect a trend to begin, and surely it has. We're right up against the key resistance area. If you've looked at any time I've pointed out market structure, this is where we go. If we break this zone, there were some sellers here. So like the open of this candle was here, the close is here, but it did have a high that spiked into where some more sellers were when this formed. So when we had the earnings announcement drop, it bounced and then went back down and closed back down here. So it swept the zone. And if we break out of that, think of it like a goalpost, so to speak. We smoked that reversion target here. Long term, if things remain, doomy gloomy in the economy, we could see a fib return, 120. We could even see a full reversion to 150 out of this. Long term, speculatively, that's half the trend back. These are some old line fibs here that we were trading in this session leading up to that high. Not saying it's going to return though. Those are way out of the money. In fact, probably not even likely to get to here anytime soon. But in the meantime, we've got some reversion trades in the short term we can take advantage of first. If things remain bearish for quite a while, this is the reversion target that I would be focused on for a swing in this. So if I was to take an options position on this, I'd be looking like 6-8 months out into some debit spreads. Maybe split this range here, split this range here, give it a $5, $10, $15 wide, whatever. Debit spreads would be appropriate in this. As far as the rest of the metrics in this chart go, this is also the end of a descending trend. Of course, we can see it was broadening, a big old megaphone all the way down, and regression line would be right about here. This is where the angular broke. This is where the trend started, and this is where the limit for resistance would be. And of course, we can get a little bit more than half of this big red bar beast looking thing here back. Pretty easy targets. So stay tuned to Dollar General. If things remain, doomy gloomy in the economy, they'll prevail. The consumer's got to go to the path of least resistance if they're being pressured. And we're at about half that LZ right now, and it's threatening to break it. We were talking about this, and as far as day traders go, we're targeting here if we break here. As far as swing traders go, if we break here, we'd like to see a trend off of this and continue the reversion. If you combine the day trading and swing trading skills, this is a reasonable entry above half where you've got all this profit cushion to fall back on should it reject here. So the prudent swing trader would take an entry on a break of half and expect to at least hit this target, and that gives you a cushion of profit. So if things reject here, you hit the bailout button early in your trade, but you bail out for a gain instead of a loss. That's the prudent thing to do. So combine those skills and you get the better entry for most of the swing traders. This will be a day trader's action zone, and the swing trader's zone would be break this high, fill the gap. Everybody loves seeing gaps fill. They always look at those. That's just a kind of a mental target for everybody up here, back to this high. I like to digress. I like to say, well, let's split the difference here. Half a move's good enough for me. That's plenty of profit on the table. And if I set my limits to get out here and it starts to threaten to break above them, I can ride that out. I've got all this cushion back here of profit I can still hang on to. So long-term trade, we could see it hit these highs. I'm not going to put a mark there just yet, but if momentum carries it above here, I'll just drag this up there and move the goalpost. Swing trade is on in this one. I think we're going to start to see some interest in it, and we're already seeing interest in it today, and we're already seeing continuation from this trend where it broke the market structure resistance line. Watch out. We got this guy above us. So Dollar General looking pretty good. Hopefully that's not a whole bunch of people asking for me on the Slack channel that I belong to. Stick it on the YouTube. I'll get it to see it there. I only have a few monitors here. I can't go looking at everything. My other big old elephant in the room, guys, or this is the gorilla. I don't know what to call GM, but I smile whenever I short them. Come on, guys. I get my tax dollars back from that bailout. Looking at this thing like, it was a pretty good short here. We caught the reversion, and I was saying I'm not going to be a pessimist and say I'm going to continue shorting it. Scalping the rally back, cool, good idea. Get the hell out before Liberation Day, great idea. Now we broke support. If these tariffs stay in place for a while and they shift into putting a little more pressure on Mexican imports, we're going to see some changes here. As my voice is failing. If GM remains bearish, half a measure move is still 42.91. Target is about half of that. And give or take, you could see it break that. And full move is all the way down here to like 38.90. So watch this, guys. This zone here is going to be crucial. If we start breaking below the low of this and get below 45, 46 bucks, we could see the trend and give a fast bearish measured move. Plus we have earnings coming up. So if these tariffs remain in place and their front lines hurt, they can be pretty nimble in this, but it's still going to hurt in a short term. So we could see a very fast bearish move set up in this thing leading up to earnings. From there, I don't plan on holding through earnings in anything as far as GM related stuff goes. So I would say it's looking like a pretty decent short for the short term. Right up to maybe the week of earnings, be a little more cautious or nimble, or maybe hedge some of your trade, whatever you got to do. But for now, I'm thinking it's likely to make a nice bearish move. If we get this whole move repeated down below, you get the idea. It's about another quarter move. So I'm looking at a decent bearish setup on GM. The bear flag is complete here. We got the liquidity grab. It's just typical. I call it the pop and drop bear flag. All we got to do is break this low, and we got momentum to take it lower. All right. Well, I started at 11 today. We've got about 10 minutes left. Let's see if we can put some filler in here. Oh, let's go revisit a couple things. And speaking of automotive stuff, let's go to Tesla. I don't want to get political, but man, going out and thrashing someone's car because you hate someone is stupid. Cut it out. You're not really making a point. You're just being an a-hole. Bottom line, you suck. I don't care if you bought a Tesla or not. You got to realize that they're not just a car company. And if you think about things in that perspective, it doesn't have to keep being a car company. If they really want to make a choice and go into building robots instead of cars, they can. Everything's in place for that. It's an affordable robot that can literally go and take the place of factory workers. Hell, one day we might even have robotic butlers in our homes and have them affordable to consumer levels at that rate. It'd be like buying a car. Think about that. I'm not saying it's going to be anytime in the near future, but it's possible. And possibilities, as we know, become probabilities to certain entrepreneurs. We all know the guy. I don't care how you feel about him personally. The dude's a businessman, and that's where the genius is. This is a very nimble company. It can do whatever the hell it wants. So think about the price action in here. Yes, short term we've got some movement to the bear side here, but everything is in favor to say we find support in these ranges, and eventually this becomes a very nice swing. Well, we have earnings coming up here. We're set up at a low, and there's some things that could mark out the other fact that this is a domestically produced product. The products they do sell, the car company side of it. If that earnings call comes out anything like the one that I really took advantage of not so many years ago and scalped a very, very low risk options position into a 2,400% plus return, and that was a debit spread, I might be inclined to put that on again. Where's my target? It's right in front of me, obvious as I can see. 340. Right at the top of our measured move is about where that reversion target would be. That's just a reversion. So if earnings starts to scrape into a nice bull trend, that's where it's going, folks. So keep an eye on what kind of data can be eked out of Tesla in general before the earnings, and figure out if you can find a prudent low risk options position to throw a few dollars into. I'm certainly going to be looking at one. I wouldn't say buy or sell, but in general, this is kind of an MO of this company. Things look bad, they look horrible, and then behind the scenes, you're missing a whole bunch, and it has opportunity. Sure, that plan can fail, and I tend to take a very, very low risk tolerance into trades like this. I'm talking $5 wide spreads traded at 4 cents or less. It's not what you trade, it's how you trade it. So if it makes a nice reversion and those spreads are cheap enough in the short term, maybe go a little bit beyond the earnings, maybe a week or two. Let's say, May 15th. I would maybe say June would be better. Look for June expiration. Look in this range. It can extend higher, sure, but we could find one of those lotto plays that really, really stands out. I like it. I'm going to wait a little bit longer to see if it finds that bottom again, but I'm going to start looking about now. And if I win a lot. If I lose a very, very, very little. I mean, I'm going to be looking for those spreads. If I find one, I will post it all over our socials and show you. If you want the trade idea, it's yours, but I'm not a financial advisor. This is just an idea, and you're the one who acts on that, not me. Thank you. Anyway, keep an eye on Tesla. Don't look away. Don't blink. A couple other things we want to revisit. PLTR. I'm kind of ideally looking at the fact that our bearish reversion target has been nailed. It's still got room to test it again, but again, we're also paying attention to the fact that we're playing high-low mid here. My voice is failing, damn it. It's allergy season. It's a great pollinating. We could sweep this low one more time. It is possible. I kind of look at this like, yes, it does have a bit of a bearish feel to it, but If we break back in above this previous resistance here, this pattern that looks bearish can fail. Apply the 60-40 rule anytime you see any kind of pattern here. Like here we had a reversal up here and it broke. It made its target and then some. And now we're back to resistance, back to support. We're right up against resistance again, and this is half back of this whole trend here. So, I mean, yes, the tariff news crushed it, but it bounced back. It found liquidity here. There's some buyers in here, people interested in this one. Can we say that if we break 85, 86 bucks, that we got a pretty good shot of at least reverting this trend? So maybe I make a new line right about here. And it's half the block. So let's kind of look for this break resistance, and there's two of them. There's a fib resistance here. There's a obvious block resistance here, and then target if things remain bullish. Yeah, about 92 bucks. Very possible. It can also reject and come down and hit $75. So on the fence with this one, but it'll be a nice nimble setup for day traders and maybe intraday swing traders as well in the short term. Long term, we don't know. I mean, this is still kind of looking a lot like a point where we could see this melt down and do a market structure thing and start finding these lows again. That is possible. This could be just a stage of a relief rally within a capitalization that takes a long time to play out. So mid-June, we could even see it go down here. It's possible. A lot of this stuff gets eaten, but that's market structure. Not every company follows it. And if you look, it's done that before. There's your IPO, your high, your accumulation, your market structure, your trend. That's all done. So does it happen twice? Not necessarily, but this does look pretty damn parabolic anyway. So be aware that we could give, all kinds of this back. There's always going to be downside risk in this one, buying at this high. But then again, we can take some reversion trades, we can scalp it back to the highs, and then we can flip our script. We can change with the conditions here. So be adaptable, be nimble, and this thing's going to give you some decent trades. I don't have exactly a short-term target on it unless it breaks this resistance and starts hitting the fib and then back to the reversion target here, but certainly watch it. Keep an eye on those levels. If this, then that. It gives you a plan. If it rejects, well, pick the other side. Go short or go into debit spreads in the put side. Whatever you got to do. Do I want to look at NBO? I'll glance at it. Come on. I don't like this anymore. It's not looking so hot. And, there's your market structure thing. Capitalization, bad news bears. It's being attacked by, all the current political stuff. Yeah, okay, it's found support here, but I think it's got a pretty good shot of getting below market structure resistance, which would be right about here, about 56 bucks. It's on the way, guys. Capitalization's been running on this thing. Is it a good trade? Would I short it here? Maybe I might take a short-term swing on it, but is it set up to maybe give you some structure down here? Probably. In the short term, can it revert? If you get a news pop on it, like RFK says, okay, well, let this go for a little while, whatever. Who knows? I don't like to pay much attention to politics, but the chart tells me it's pretty bearish. I wouldn't trade it bullish in this respect, but I might, if it makes a reversion and then rejects, I might go bearish again. That'd be my inclination. Stay with the trend. MRVL, more of the same, but different thing. Can we see maybe support in this range? Let me go with the daily chart here. We're into the bar here. If it can hold 56, we might get a reversion trade back to like 66, a $10 swing or so. But if it breaks that, well, we'll hit the low again. Pretty easy. I'm not really interested in that. HIMS, well, it didn't last. Let's look for support maybe back in this area here. But again, this is one of those companies where if I'm interested in it, I might take a bearish approach to it. But that's going to be a biased decision. We did fail the high-low mean here. We hit the new low, and then we're finding some liquidity within the wick here, but I don't know if the bears are done with this yet, guys. So be aware that this can reject again and continue a little lower. target to break is about 27 and some change. If we smoke that, we could see a nice clean bearish measured move with this being the primary. And that would put us pretty much right on point for that trade there. Let's see here, split the difference. And don't forget half. Always remember half. You can bear with me on my drawings. Okay, so we could see this. It did reject resistance here. It did reject the mean of the range in the consolidation point. So it's looking like all we got to do is get through the quarter level here, this support here, and then we got a reversion target and a bearish measured move is possible. So we could have a decent bearish setup here after all. It's slow, it's grindy, but it makes some decent trades. Last but not least, let me go into, well, the great equalizer. Baba. I was in a little bit of disagreement once we were thinking it might be bullish here. I was looking at this as the red line. It failed that. It sure did smoke it. Can we be bearish back to reversion here around 117, 118? Very, very probable. Can we say that maybe we get back into a little bit of an extension on that, hit like 107, 108? Yes, very likely to give half this trend back. But right around there, I might say there might be a potential for a reversal. So for now, I'm thinking more of a bearish effect on this. If we reject this key pivot here, I guess I'll turn that one purple and the other one red. Let's switch them. Nope, not that one, this one. And dig into the 2-hour chart. So see if we can come back to it. If we reject here and continue to go low, that's going to be like the red line of the trade, and we should see a return back here to you know, around 123.65. This is a rebound or relief rally type of situation where we found liquidity. We had the tariff news just destroy this thing. Dead cat bounce here, I think, more than anything. And if we reject here or here, there's your primary, there's your secondary target. Pretty obvious. We could make a nice clean bearish measure move after this, or out of this after all. But let's see. There's going to be tariff news risk on this thing, so be nimble if you're going to scalp this thing. I don't like trading BABA much, but when I do, it's usually just a debit spread, so I'll be prudent with it. All right, well, it's about 12 o'clock here, so I think we've done the whole hour, and we got quite a few trade ideas out there, and I got a couple that I'm pretty keen on. I like the way Tesla's setting up. I'll wait a few more days to see what's going to happen with that. Amazon, some of the automotive parts and service industry stuff I might keep an eye on. Before I forget, one last one I want to look at, and I worked for these guys for a little while. Don't forget about Goodyear. That is genius. Everybody was looking the other way on this one. I talked about it briefly last week, and here we are. Bullish as all hell. That wasn't really a prediction. That was really a let's go play high-low mean with this structure here. And we are just about to hit the fib of this wick here. In fact, we did 1050. Look for a close above about 1030, and we should see a trend fall out of this thing and maybe give us a reversion to like 1220. But man, what a move on tariff news. That was pretty exciting. Don't forget about this guy. This is another key metric to everybody's going to be more interested in maintaining their old cars for a while. And yeah, we all already know why. We don't have to point at the obvious there, but these guys are in the service industry. Yes, they make a hell of a lot of tires, but they still have shops that produce service revenue. So in short term, they're going to take a lot of revenue on the service side, I think, in this, at least in this year. And then, of course, they're still selling tires, and that's a global thing. They're produced primarily here and there and everywhere, so be aware that tariffs will affect this, but in short term, badass bull trade. All right, guys, we'll see you next week. Be sure and come back again on Tuesday. We're going to probably do another thing. Might be a Thursday that I do this next week for the watch list, but I'm helping Matthew launch his own podcast channel and get that all rolling, and we've had some awesome episodes there on that channel. It's called the well, my brain. Um, Rebel Finance Podcast. I couldn't put the name together. Jeez, that's bad. But check it out. I think you're gonna like it, and I'm gonna always point back to here. What we do is more of an educational thing here on the Bullish Bear side. That's gonna be a more let's talk about the market type of thing, and go into deriving and back and forth focus of trade ideas too. So education will flow into that as well. So I'm going to kind of bridge the gap here and basically do what I can to help support both sides, both professional and retail trader. I'm going to keep doing that. I think that is a great place to focus and bridge that gap and thrive together. So I'm going to try and get that all intertwined here a little bit better in the coming months. And I think we've got some good things to say about each other. So